The General Agencies of the United Methodist Church offers 3 optional pre-tax benefit accounts that are regulated by the IRS and described in IRS Publication 969 and 503. These accounts are a Health Flexible Spending Arrangement, or Health FSA, a Dependent Care FSA, and a Health Savings Account, or HSA. The Health Flexible Spending Arrangement, or Health FSA, can be paired with any of our 3 medical plans. For instance, if you are enrolled in the high deductible health plan, but you are also enrolled in a Medicare plan, you can choose to enroll in the Health FSA. However, you cannot enroll in the Health Savings Account, or HSA, if you are enrolled in the Health FSA. The current IRS maximum amount that you can put into a Health FSA is $2,750. The IRS has placed a use it or lose it rule on these accounts. When you enroll in a Health FSA, you tell your agency how much money you want to contribute for the whole year, and the agency divides that into 26 equal deductions from your paycheck. You can use the full amount of your annual contribution as of January 1, 2021. As an example, if you decide to contribute $260 for the year, your agency will deduct $10 from each of your paychecks throughout the year. You can use the full $260 in January to help pay for eyeglasses, doctor's visits, prescription drugs, or other eligible expenses as listed in IRS Publication 502. If you leave employment with your agency for any reason before the end of the year, the agency will lose or forfeit the money that they have not yet deducted from your paycheck. However, if you do not use your Health FSA for any expenses and you leave the money in the FSA account, you will lose or forfeit those funds at the end of the plan year. The IRS does allow the agencies to grant you a grace period in order to use those funds. The grace period extends your time period for eligible expenses to March 15, 2022, and extends your claim filing time to March 31, 2022. But after that, you lose those funds. So be sure to estimate wisely how much money you will spend on medical and health expenses for 2021. A Health FSA is different from a Dependent Care FSA. Dependent Care FSA eligible expenses include things like preschool, summer day camp, before and after school programs, and child daycare or adult daycare. These expenses must be something you pay for so that you can work. The IRS 2021 Dependent Care FSA limit is $5,000. Dependent Care FSAs are also a use it or lose it plan per the IRS. Dependent Care FSAs can be used to pay for qualifying expenses only for your IRS qualifying dependents. You can enroll in the Dependent Care FSA while also being enrolled in either the Health FSA or the HSA, because a Dependent Care FSA doesn't pay for medical expenses. You can only use the Dependent Care FSA funds as they are deducted from your paycheck. The grace period also applies to the Dependent Care FSA. A Health Savings Account, or HSA, is a savings account that you open with Optum Bank. You can put money into this account tax-free and use it to pay for things like medical, dental, vision, and prescription drug expenses. The IRS 2021 limits, or maximum contributions to an HSA account, are $3,600 for an individual or $7,200 for a family. Individuals 55 years and older can make an additional catch-up contribution of $1,000 after they meet the limit for the year. You are responsible for making sure that you are eligible for a health savings account. First, you must be enrolled in the high deductible health plan in order to have an HSA. If you are enrolled in any form of Medicare in 2021, or you or your spouse is enrolled in a health FSA in 2021, you cannot be enrolled in an HSA in 2021. If you have money remaining in your 2020 health FSA account as of January 1, 2021, you must wait until April 1st to have a 2021 HSA. If you enroll in the high deductible health plan for 2021, and if you are eligible to open an HSA account, your agency will put $500 into your HSA account, whether this is your first time enrolling or you are simply continuing your coverage from 2020. That $500 counts toward the IRS limit for 2021, so your goal amount will be decreased by $500. The HSA is your personal savings account. If you leave the company, this account and all the funds you have in it follow you. Also, there is no use it or lose it rule with an HSA. Any money that you put into the account but don't use will roll over every year until you use it. You can only use the amount of money that you have already contributed to the account, but you can change the amount that is deducted from your account at any time during the year. As an example, if you decide to contribute $6,500 for the year, your agency will deduct $250 from each of your paychecks throughout the year. In February, you have contributed $500 to your HSA from your paychecks, and your agency has contributed $500 into your account on your behalf. You can use $1,000 at that time to help pay for eyeglasses, doctor's visits, prescription drugs, or other eligible expenses as listed in IRS Publication 502. You cannot spend more than the amount that has been deposited into your HSA account. If you leave employment with your agency, the HSA account goes with you. If your spouse gets a higher paying job or loses their job, you can change the amount of money being deducted from your paycheck. For example, you can increase your per pay period deduction from $250 to $275, or you can decrease your per pay period deduction from $250 to $100 or even $0. Remember that the IRS says that you cannot have an HSA and have a health FSA. And you cannot be enrolled in the HSA if you are enrolled in a Medicare plan or if your spouse is enrolled in a health FSA. You must be enrolled in the high deductible health plan to have an HSA. You can have the health FSA with any of the 3 medical plans. You can enroll in the Dependent Care FSA and be enrolled in either the HSA or the Health FSA. You cannot be enrolled in both the Health FSA and the HSA at the same time. Thank you for listening.